Welcome back to Global Money Talk, live from the New York Stock Exchange and brought to you by SamProTV. In the second half of the hour, I am joined by Tai Wong, independent proprietary trader. Tai, so we're back and we're going to be doing a market check right now. So we're seeing the major U.S. stock averages in a wait-and-see mode ahead of the rate announcement coming out today at 2 p.m. Eastern Time. Let's take a quick look at the charts with the Dow Jones Industrial Average. It is lower on the session, but fairly unchanged compared to yesterday. The Nasdaq Composite Index is lower as well, just down fractionally or 0.15%. The S&P 500 off by just 0.1%. So of course today is Fed Day, Tai. We've been talking about it for days now, and we finally get that rate announcement out at 2 p.m. Eastern Time. We're going to be listening to Powell with his press conference, as well as the economic projections. So between now and 2 p.m. Eastern Time, do you expect to see this pause when it comes to the major equity averages?
I think we're going to be in a holding pattern. I think people have sort of decided, I think people have decided whether it's going to be 25 or 50. They've probably decided what they want to do. They're tweaking their positions in terms of getting it just right. And you see that actually in the fixed income markets. Yields have backed up across the curve as people said, okay, even if they go 50, we're probably a little bit too much over our skis. So we've seen a little sort of correction there. You're seeing gold is a little bit lower, silver looks a little toppy, and palladium actually, which is at 7 straight rallies, is down 4%. It's called a bearish engulfing day, or an outside bear day. It looks like that is probably going to correct. It had a good run, and I used to trade palladium, so that's why I'm particularly interested in it. But I think all the markets are now sitting saying, okay, what is the Fed? If the Fed does 25, this is what I do. If the Fed does 50, this is what I do. And you better have your orders in, because the market is going to move in a handful of milliseconds once that number comes out. And it's been a long time since we haven't said that we felt we knew what the number was. So I think some uncertainty is good. I think the market should not always know what the Fed does. I know the Fed prefers, actually, in recent years, that they don't want to surprise the market, but a little surprise is actually sometimes healthy, and it gives respect to the central bank. And I think hopefully they learn this lesson. And we'll have more to talk about.
Yeah, absolutely. So whether we get that 25 or that 50 basis point cut, the thing is that the Federal Reserve is going to cut for the first time since 2020, so that's since the pandemic. And of course, this does set the stage for lower interest rates in the long term for the Federal Reserve. And I do very quickly want to take a look at some of the economic data that came out. So we got housing starts and building permits for the latest month here out in New York Morning Trade, and that did beat expectations. And you and I, we've been talking about falling mortgage rates and the implications of a rate cut for the housing market.
Mortgage rates fell for the 8th straight week, I think. I think it was 615. I thought it was what came out this morning. And housing starts were great, substantially above expectations. I think a fair amount of that was actually single family versus multifamily. And single family is really the important piece of the data, because single family says, or as we spoke about yesterday, you have to buy the appliances, you have to build the foundation in a house. That's cement, that's lumber, that's copper for the wiring. Multifamily has less of an impact, and I think multifamily is a segment that has been less strong, but single family homes, strength in there is actually really, really good for the economy. And building permits, I think, was up. So is this the market the home builders trying to front run the Fed, or saying, if the Fed's now going to be cutting rates, and it'll take us, I'm not a home builder, but it might take me 9 months, a year, or maybe more to get a house from start to finish. Well, let's get started now, because as rates come down, we're going to get a lot more demand, and maybe it's this pent-up demand that we from the last couple of years when rates were so high that nobody who had a mortgage was willing to sell the house and lose that really nice mortgage.
And of course, we'll have to keep an eye on what happens in terms of mortgage rates, but of course that will have an implication on home buying across the country. And before I move away from what we're seeing in terms of the housing market, one area that I want to ask you about is commercial real estate, especially since we're in New York City and we're starting to hear from the major corporations about the return to the office. And we know the last couple of years, especially in a metropolitan area such as New York City, working from home, being allowed to come into the office just a few days a week, we know that this has severe implications in terms of business cycles in big cities across the country. So what do you think will happen as we head into 2025 when it comes to commercial real estate?
I think commercial real estate looks like it's going to continue to struggle. And the reason is, if you look at people who, and I know someone who's in the building services area, which is the people who actually supply the cleaning fluid and supply the paper towels and the toilet paper, which you always need, and other things like that. And they're saying that their level of what they're selling is only probably 60, maybe 65% of what it was pre-pandemic. So even though you get headlines like Amazon bringing everybody back, there's flexibility in it, and I think it'll be a long time before we get back up to where we were before. And at the margin, that's where people, if it's commercial real estate, when there's demand up to 80%, 85%. That's when you can start charging rents and make a lot of money. At 65%, even though my parking lot is full Tuesdays through Thursdays, that might just be the demographic of the town that I live in. More people are coming in, but I think they're struggling. They will continue to struggle, and I think we need a little more pain. I think we probably need some failures, some defaults, and then when sentiment is at the very, very bottom, like it was in Intel, different sector, last week is the time to really get into it. But I don't think we're there yet. I think there's a little bit more pain to come in commercial real estate.
And Tai, you and I always talk about this in terms of the subways as well as transportation here in New York City, and we know that the landscape has changed so much. Personally, outside of the New York Stock Exchange, it used to look so different before the pandemic, and we noticed a lot of the businesses here, they're still quiet despite more people returning to the city for work during the work week.
Yeah, and not having people in the office really impacts the merchants around the people who sell breakfast, who sell lunch, the poor guy who has the cart.
Yes.
Right? He
coffee, bagels.
Exactly. The people who the cleaners who do the shirts. I know cleaners have gone out of business. I see them every week, and I'm like, how's it going? He goes, not what it was. And you can see, this is part of the not just the pandemic, but how we changed maybe in part due to the pandemic. But you feel bad for the boot blacks who used to have a lot of shoes to shine. And most people now, you can see on the floor here, people are wearing soft shoes or wearing sneakers because, frankly, they feel better. They're better for my aging knees. So there's been a big impact. I think that continues to be felt.
Yes, absolutely, because when you walk around New York City, in particular areas where formal attire is expected, you still see more casual wear, athleisure entering the workplace. So I do absolutely agree with you when it comes to dry cleaners and some businesses we used to rely on pre-pandemic.
Right.
They're no longer around anymore.
Right. I'm down to one cleaner in town. I've got to use that cleaner now. There used to be two.
Well, it might be better for overall health.
Yeah, that is true. That's true. And I remember I used to walk to work and I would pass by Brooks Brothers, the big flagship store on 44th and Madison, and it's gone. That ship sailed, and now it's a coffee shop. Which is says a lot about how the market has changed. But the pandemic and work from home has had a big impact.
Absolutely. So, Tai, as we head into the final minutes of the show, I do want to very quickly do another market check and take a look at just the S&P 500. So this is an index here where we've continued to see new highs, but in today's session it is lower. It is off by about 0.15% on the session. So do you expect to continue to see higher levels as we head into the rest of this year?
So that's a magic question, and it is what is the Fed going to do? What the dot plot, does the economic projections look like, and where what Powell says at his press conference. So it's really a three-prong attack this afternoon. So I think what we'll see is the S&P 500, I think, hit historic highs maybe by a point yesterday and finished lower. So it's historic highs. It's great. I think actually the market will now, even though I think the majority of economists are saying 25. I think the market, the speculators, the people who really move the markets are really thinking 50. So the whisper number really is 50. So if we get 25, I think we're going to get a much more violent market move than if we get 50. If we get 50, I think bonds rally a bit. I don't think it rally a huge amount because we're already there, and it depends again on the dot plot. Where does the Fed, these Fed governors see us at the end of 2024? If they go 50 and they only see us, at 75 basis points, 100 basis points of cuts instead of 150, which is what some of the market wants, that's going to impact how the markets behave. So hard to prognosticate, but I definitely think that we will get a more negative reaction in most markets, other than the dollar, if it's actually only 25 and not 50, after we've been sort of teased into 50. And been doing some thinking about it, and why did this Wall Street Journal article come out, right? Did Jay Powell at the end of the week say, you know what, it's 90-10 for 25, and there's a chance we might do 50, so I need to put it into the mix. So I'm gonna call Nick Tamarias and say, can you put that into the mix? And if that is indeed what happened, and I think a lot of people believe that's what happened, they've done a great job. So does that mean Powell wants 50? It's unclear. And if you look at the Federal Open Market Committee as it stands right now, a lot of these governors are pretty new. And some of the regional Fed presidents who are voting are also pretty new. So there is more uncertainty in that. I happen to know that Atlanta Bostic is that tends to be dovish, and John Williams of New York tends to be a little hawkish. But some of the other ones, we just haven't seen enough of how they vote and how they speak. So it really is a little bit of a cipher. And then finally, are they going to be 50 and have a sort of very neutral press conference? It's 50 and we're going to see. The market's not going to love that. I think the market might dive on 25, but if it says 25, we're going to continue and we will absolutely go bigger if we need to. You're going to get a big dip when it comes out, and then at 2:30 or 2:45 when he starts this, when he really gets into the press conference, you might get a big rally. So it's going to be a pretty volatile afternoon.
Yeah, and I'm sure you and we will be in front of our screens, whether we're looking at our laptops, our smartphones, or iPads, our devices. We're going to be listening very closely to what Jay Powell has to say.
And, it's one of those being sort of wonky about this is you look at the minute-by-minute chart, and I look at it in gold because I'm a gold trader, and you can see the comments that he makes, it will immediately hit the price. And because the press conference, I think, is sort of 5 or 7 seconds delayed, you actually see the price action before he says it, which is really remarkable in terms of, you don't want to be watching a tape delay if you're actually trading. If I'm just, watching and, thinking about what the overall picture is going to be, okay, but 7 seconds is a lifetime.
Yeah, you do bring up a great point there, because you might see the price action move on a chart, whether you're talking about you're watching the equity indexes, whether you're watching gold or you're watching the FX market. And nowadays, with our access to technology, you might have a terminal up, we might be hearing a few second delay of that press conference, but access is key here, isn't it?
Yes, absolutely.
Yeah, and for our viewers out there, I think it might be very helpful to walk through the dot plot. I know there are expectations for the dot plot, and of course whether we might see a hawkish or dovish commentary or expectation heading into November as well as December. But here on Wall Street, it's very interesting because there are a lot of animal references, right? Bull versus bear, hawk versus stub. So can you walk us through this? So
the dot plot itself, really what's going to matter is the 2024 dot is where they see it at the end of 2024. It's sort of like a scatter plot. Is it 100 basis points below where it was? Is it 75 or is it 125? The market right now, the futures are predicting somewhere between 100 and 125. That's going to instantly veer towards 150 if they go 50 basis points, because then they go, maybe we'll do 50, 50, 50. The end 2025 dot is going to move maybe maybe 25 to 50 basis points because they already have it substantially below where the end 2024 will be. And then what you don't see is in 2026 and the long-term neutral rate, you really don't see that move very often. A move actually in the long-term neutral rate, if it is unlikely, but if and when you see that, it's actually pretty important because that says that will signal to the markets, and it's going to hit the longer end of the bond market quite substantially, is where do they think long-term rates have to be? Is it 2.5? If that goes to 2.75, or if it shifts, that will the bond market strategist will be all over that the next day because that's really important. And many of us think, myself included, that I think where the long-term neutral rate, I don't know if we're going to get inflation at 2% on a going forward basis for a number of reasons. So if that's going to be higher, the long-term neutral rate has to be higher. And that has a lot of implications for books with long duration, where they have long, which is basically sensitivity, portfolios that have sensitivity to long-term interest rates.
And I also want to ask you about the effect on FX markets, in particular after this rate announcement comes out. So what do you think, just based on your expectations, what can we see in the FX markets?
Well, let's take a look at where dollar yen is right now. I think I realize I haven't looked at it for half an hour. Dollar yen is trading at 142. It got up to a high of 142.43. Just the other day, it was below 140 for the first time in 14 months. So I think the biggest impact you'll see immediately is dollar yen. I think the market was short. The speculators were short dollar yen, and they've been covering the last few days. So I think dollar yen, the dollar rallies substantially if it's 25 basis points. I think we could see 140, certainly 143, maybe even 144 over the next couple of sessions until really everything sort of settles in and the market digests what the Fed has said. And let's see if the Fed sometimes, starting tomorrow, the blackout period is off, and if the markets reacted not the way they want to react, somebody will come out and walk it back a little bit. Somebody like John Williams, head of the New York Fed, they'll say something, and if something is not, is sort of, Powell says something and the markets really over-focus on it. I remember his first press conference, and he said a few things that the market went, and he's gotten much, much better at that. And you have to remember the man has training as an attorney, so I mean, I think he's one of the really great presidents because he can speak in terms, even though he's an attorney, like normal people understand him.
Yes, I think that's just so awesome, important, like simplifying that.
That's right, that's right.
And I'm glad you brought up dollar yen because right now in New York morning trade, we are seeing that currency pair straddle 142. And if we zoom back to earlier this summer, in particular, the end of July, beginning of August, we were hearing about the unwinding of the carry trade. And when it comes to global central banks and rate differentials, this is really important.
Yes, and whether the people, they go 25 and it looks like a steady 25, that carry trade from here might come back a little bit because the Japanese don't look like they want to move rates very quickly, and they won't move it a lot. They're not going to raise it a lot. So the rate differential is still going to be substantial, but in FX, definitely not yet.
And one other point I do want to mention is while we're talking about commodities, FX market, in today's session, oil. So we talked about inventories yesterday, but of course the big question is, you and I have been talking about what happened in Lebanon yesterday, the Hezbollah being attacked in terms of their beepers, and today in terms of the walkie-talkies. So can you tell us a little bit about what you make of the latest headlines we've been getting out from the Middle East?
So I'm just taking a quick look at oil since I haven't looked at it since the beginning of the show.
So we have the chart right here
excellent.
as well. So let's take a look at that.
Excellent. I think crude has come back quite substantially over the last week or so. I think the market is now correcting some of that bounce. The data that we had just at 10:30 this morning, I was also looking at that because I had just come on. It showed that crude stocks were down 1.6 million barrels versus up 830 some odd barrels expected. The consensus was flat. So this is sort of bullish news for the crude market. And crude stocks are actually overall, I think global stocks are at 4.4 million barrels. And that's really on the low side. The market is not really worried about that, but maybe they should. And as you mentioned, and I think the news came out when we were looking at during the show yesterday, that Hezbollah had its, all its beepers, 3,000 beepers exploded. And, what is likely to have been an Israeli attack, and, a shockingly effective attack as we can see. And then this morning again, it looks like their walkie-talkie radios have also exploded. And they've just gotten a new shipment of these radios. So my concern here, and it hasn't been reflected in the energy markets, is Hezbollah will retaliate. They have to. You can't take a hit like this and not retaliate. The question is, what kind of retaliation will it be? Will it be, all right, we'll shoot a few hundred missiles, have a lot of rhetoric, and let it go? Or is it going to be some massive retaliation that widens that conflict and potentially draws Iran in? And I think if we get the latter, I don't know what it's going to be. I mean, this is somebody called it a decapitation strike. They hit pretty much all the senior Hezbollah members because they all communicated via beeper, and perhaps these walkie-talkies as well. Are they saying, what, we'll answer, but we won't widen the conflict? I don't know. But if that conflict widens, I'd be worried about oil shooting up very, very quickly. Now, that said, it's sometimes really tough to trade oil. I think something really bad is going to happen, so I'm going to be long. And oil is actually a really hard thing to trade because it's futures, and it's monthly futures. So you have to roll those futures, and futures rolling, maybe we'll get into that on an Insights one day, can be very, very expensive. So I think I would definitely not be short oil. And, if I was a speculator, I wouldn't be short oil. Maybe it's not enough to be long, but this bears watching, and I'm really shocked to see that there was a second strike on Hezbollah this morning.
And you and I, Tai, before we started the show at the top of the 11 o'clock hour, we were reading through the headlines that were coming through. This does raise a lot of geopolitical concerns. It raises questions about security, intelligence, as well as supply chain, doesn't it? It
does. And supply chain was something that at the beginning, during, and right after the pandemic was a big deal, and now people have forgotten about it. But shipping rates have really come up sharply over the past few months, and it's not on somebody's radar screen. It's sort of like something that you never think about until there's a problem. And if you get higher shipping rates, suggests that they have pricing power, but also that we may have some issues with supply chain again. And Americans have forgotten what it's to be like that. Oh my goodness, we might run out of toilet paper, so let's go to Costco and buy crate loads of this. It's a serious issue, and I think we may see more of it as time goes on.
Yes, I do agree with you, and it is no laughing matter. I was just thinking back to March of 2020 when toilet paper was in short supply, and hopefully we don't have to face that yet again. But I also do remember how a lot of the manufacturers, they had an oversupply of commercial toilet paper for offices because everybody had been going home and no longer commuting to offices. So it really does make us reflect on what happened 4 years ago. And I think it's so timely, Tai, since we're here ahead of the Fed rate announcement, and we're most likely going to see a cut from the central bank later today.
Absolutely.
Well, we will be back here bright and early tomorrow morning, and we will be bringing all of you the latest regarding the Federal Reserve and the implications going forward for investors and the market. That will do it for Global Money Talk live from the New York Stock Exchange. We're so excited to bring you daily coverage here on Sampro TV. And you can check out the show anytime on our YouTube channel by searching Global Money Talk. Thank you so much for joining us, and we'll see you bright and early tomorrow. Have a wonderful day.